Hi everyone, this is Matt Curfman here with Richmond Brothers for Matt's Minutes edition for late February, early March of 2018. Wanted to touch base as we wound down the month of February. As many of you may have seen just in looking at headlines, and if any of you log in daily, February was a pretty volatile month in the market overall. If we go back to January 26th was the peak of the market, and so stocks were at their all-time highs, generally speaking. And so when you come off of that all-time high through February, we've had a 10% correction, and that's the first correction in a great number of years. And if you remember from my previous two Matt's Minutes videos, we said in 2018 we expect a correction that is positive, that is actually something that's needed in order for things to keep moving forward. And so as you think about it, the 10% correction does not mean we're falling into recession. We've seen volatility go up, and in the month of February, the overall economy, the markets broke a 10-month streak of really just positive numbers. And so, you know, take a step back, take a pause, and so just because the portfolio and the economy or the market takes 2 steps forward and 1 step back, our job is to really help you not panic when we have the 1 step back. Overall, corporate earnings are still great and growing. The Fed is raising rates, and that seems to be the concern among many. But keep in mind, the Fed doesn't raise rates unless the economic signs are pretty strong. And so take a pause and think about that. So if they're raising rates, that means things are good, but yet they raise rates and the market goes south. And so it doesn't seem to correlate. Everything doesn't have to correlate on a day-to-day basis, but as a general feeling, if the Fed is raising rates, that means the economy, the economic conditions are doing well enough that they want to make money more expensive. GDP, gross domestic product, is also growing, and so at a pretty high and sustainable rate when you compare back to the last decade. And then lastly, since the end of the year, we've had tax reform get passed. And if I isolate tax reform specific to business, corporate earnings, and your money, it actually has a pretty positive impact. The corporate tax rates came down. There's also a lot of U.S. businesses that operate overseas and generate profits overseas, and they haven't brought that money back to the U.S., and the reason is there was a really high tax rate on it. Well, part of the tax reform included bringing some of that money back at a much lower tax rate, on average around 15.5%. That's a really big incentive as you look at the overall economic conditions leading into 2018. Now, all those things are going on that are positive does not mean that the market and these stocks can't be volatile along the way, but just because they're volatile, that does not mean we're moving over or tipping into recession. And so we just want to make sure and put some perspective out there. As you get your February statements, you're going to see values have come down from January, but again, with all of these strong signs, this is not a time to make major shifts or major adjustments to portfolios. As we talked before, and as we'll continue to talk, our expectation is that if we hit recession, it is probably going to be more towards the second half or latter part of 2019 and possibly into 2020. Some of you have already signed up, but at the end of March, on March 28th in the evening over at Ella Sharp, we have a State of Your Money event, and this is just a semi-annual thing. David and I get up and speak, and you get to hear from the horse's mouth, so to speak, about what we think about what's going on and update you on our thought process in the past, present, and then going forward, what's causing us to make different decisions with your portfolio. And so we've already had a good 100 people sign up. We do have limited seats and space there. So if you do have an interest, please contact our office, questions@richmondbrothers.com, to let us know if you would like to attend. With that, in gratitude, I will sign off. Thank you so much for being part of the Richmond Brothers family. Have a great start to March for 2018, and I will be back in touch later this month.